Hi, I'm Victor. In this video, I'm going to cover Big Five Sporting Goods. This is a company that I've invested in for a long time, and I wanted to provide an update. A lot of news has hit the news channels concerning retail. Walmart and Target had really disappointing earnings reports, which caused their stocks to really tumble. On this same day, discount retailers TJ Maxx had a positive earnings report and its stock rallied. But in general, with such big companies like Walmart and Target going down, it really affected the whole space, including Big Five. So I wanted to cover this discount retailer and share with you why I continue to be an investor, why I'm optimistic about this stock for the long haul. So it looks like we're going to head into a recession where the consumer isn't going to have all the money they had, over the last couple of years. No more stimulus money, going to people so that they can go out and spend their money on stuff. Big Five has always been a discount retailer. You can get a good deal on shoes, a good deal on sporting equipment, outdoor items, apparel, camping equipment, those types of things. It's always been that company. It's also a very focused company that knows how to procure and get their products and really have their shelves well stocked in their stores. So I think, Big Five as a discount retailer is in the right place as we head into a recession. Now, the job description as a value investor is that you invest in companies that you believe in. You see that they're valued far more than their stock price really represents. And that's really a test for a value investor invested in this company. Reason for it is if you look over the last 5 years, if you had bought the stock 5 years ago, held it to this moment, you'd be down about 8%. So that would really test your confidence in the company, I'm sure. Year to date, it's a further test. Year to date's down 39%. And that is a real test to a value investor. For me, I continue to really make sure I understand their financials well, I understand their business well, and put together a valuation model that I believe in. And therefore, I'm in this thing for the long haul. I believe that Big Five is discounted by 228%. In other words, I believe the stock price can triple in this company. It has before, and it has the fundamentals to support that theory that I have. Let me take you through the numbers that they have reported more recently and how I value this company at the level it's at that makes me think that they're discounted at this level. First, I like to value companies based on their free cash flows that they've produced. The last full year, they produced 100 million in free cash flow. I'm not expecting them to grow, pretty much at all. If they grow, wonderful. If they stay steady, that's how I'm basing the valuation. That way I'm conservative. I'm also taking a very high discount rate, which is the weighted average cost of capital. I got this from Finbox, and I took the highest measure that they have for this company. So I'm taking those two factors that we have zero growth, a very high weighted average cost of capital as a discount factor, and $100 million of free cash flow. This determines the terminal value that we expect for the company into the future. The first 4 years are going to be flat, 100 million in free cash flow produced. If I take the net present value of those cash flows and the terminal value, I get $892 million is the value of this retailer. But their market cap currently is $271 million. So it allows for a very steep discount on this stock. I believe the stock price at full valuation should be $39.92, but it's currently trading at $12.17. So that's why I conclude that this stock is discounted by 228%. This company is well operated. It has veterans in the discount retailing business. The leaders at Big Five have been with the company for a long time, so they really know how to operate in this micro industry. Over the last 2 years, they've grown at 8%. They've really generated free cash flows. So they procured very effectively, and they sold appropriately and grew. So very good job, management team. They returned $69 million to shareholders in the form of dividends and stock repurchases. That's great. They returned roughly 20% of their market cap back to investors. You just don't see that. They have a low market cap at 271 million. Their free cash flow was 100 million in 2021. So that is roughly 39% free cash flow yield. I don't have any other company that I own that has that type of free cash flow yield. And their cash balance is 62 million. So that's like 23% of their market cap. Again, these are just great financials. First quarter, they guided that they were going to be lower because they have very difficult compare in 2021. Everybody was getting out of the house, going camping, going and play sports outside and so forth. But they still had a really profitable quarter. I think they're going to have a very successful 2022 because discount retailing is still going to be very attractive to the consumer who needs to do more with less money now. And here's another benefit of being a stockholder of Big Five. You get paid an 8.17% dividend from a company that can afford it. They generate so much free cash. That dividend is not at risk. The only question is, will they do more buybacks, which might be a good idea since the stock price is so low. My outlook is Big Five will continue to produce high free cash flows and be profitable. Being a discount retailer is a great place to be because we're going into a recession and the consumer needs to really make their dollars stretch. So they need to buy, instead of buying a $200 pair of sneakers, they need to go to Big Five and buy one for $40, $50 for themselves or for a child or for a loved one. So I believe that I have very high upside on this stock and I'm going to get paid a really nice dividend as a stockholder. So scorecarding Big Five is easy. It's a very discounted investment. I truly believe in their management team, very well operated company. The timing is great to buy Big Five. So this video is for entertainment purposes only. I don't recommend that you buy Big Five or any other security. And I hope you found the video interesting. Thank you for watching my video. I hope you found it interesting. Please do me a favor and like my video. It just helps the algorithm so that my channel will become a little more well-known. If you like the content, feel free to subscribe, click the bell if you want to be notified when I create a new video. And I hope you have good luck as you invest in 2022.